Get ready.
Okay.
No.
Okay, welcome everybody to our micro moment trading CSE/CSE podcast. Glad you're here. It's Wednesday, 10 a.m. Central Time, and we should have a good crowd. We have Tim's here, and Randy's here, and I'm here, and Mike is here, and so we're going to get all up to date. We just had one incredible day. We just came off our morning session of micro moment, and they had a late session yesterday. So I report those for today, not yesterday, but they had a 15% return in a later session. A lot of the clients made a lot of money. Today, we're up 20%, 5.70, and you add that 15%, so we're 20% for the week. We're up 70%. So our average for the last 12 months, it ended for the first year, ended for this last Friday, 57 week was $5,143, 5,143% plus 90 plus 0.94, 98.92 a day average. So it looks like the market's kind of improved. We're going to come back up, maybe hit that average this weekend. We've been a little below it, but that's what the true average is through Friday. So you can go to our website, micromomenttrading.com. Both it's integrated in with the compound stock earnings website, so you can get anything on compound stock earnings and micro moment. And sign up for our free cow report. It comes out late Friday afternoon. It's long. It's about 20 years old, and you get all the comments our clients are making and what we're responding with, and you see all kinds of events coming up. We have our twice a month. I do the live 2-day seminar on the weekend, Saturday and Sunday. It's going to be 16th and 17th. Not this weekend, but the next weekend. And it's going to be exciting this time because I'm going to cut on the microphone so people can actually talk instead of just sending in messages. And Micah and Tim and Randy have agreed to make, guest appearances. So they may be on there 5 minutes, they may be on there 5 hours, who knows. But if you have any questions, I know Randy should get some questions because so many people are doing the almost micro moment trading that Randy does with his traditional cover calls. We had one guy report today. And what was that return he made, Tim? You remember?
Yeah, it was Sam. I don't remember. I'd have to look back in the comments, but he had a.
I want to say.
Yeah.
5.3%.
Yeah, there you go. And so I suspect Randy could, kind of add a lot to that seminar, and so you can find the link on that and how to sign up for it at micromomenttrading.com.
Just a quick comment about Sam. Sam does micro moment trading. Sam does platinum covered calls. I think Sam does. He's learned all the techniques, attended all the webinars, seminars, and is doing a great job. I mean, he's killing it.
Yeah.
Randy, I had an email yesterday, and I read it on the micro moment trading seminar session, morning session. A gentleman, I won't say his name, but he's been taking your seminar since 2006.
All right, choppy mess again. That's wrapped. The last.
What?
We get started.
Yeah, he's been taking your seminar since 2006, and he mentioned how well, and he still takes them, and. So we have these folks have been with us forever. It's just been a rush of them, I guess, because maybe they hadn't had a lot to do at home that are coming back in and signing up for more of your stuff and also expanding into micro moment techniques also. Mm-hmm. So let's start off with Tim. Tim had an exciting day yesterday. Kind of bring us up to date. You and Micah had a good day today. And what's going on with micro moment trading?
Micro moment is doing well. It at least on the Qs, it feels like they're normalizing. They're kind of getting back to pre-crash predictability, which is real nice to see. We've had 2 days in a row of second session gains, which has been really nice. We've had some big moves to the downside in the last hour of trading that we've been able to capitalize on, and had a pretty good group the last couple of second sessions, and people have been doing real well. So we'll probably do that again today. We've been finding that late session trading, we're finding some some large swings that are happening, some good momentum plays, extended legs. So we're we're eating those up. We had a pretty good morning, and actually made a trade just before. Well, it was about 10:46 Eastern time. We had a nice down leg on Q and pulled 9 cents out of that.
Fantastic. Would you send me a text on that so I can put it in tomorrow's?
Yep.
Okay, good.
Yep. Absolutely. So, the Qs have been very good. I just love seeing that, the spreads are back to normal now. We're starting to see the prices, the strikes getting closer to what they were pre-market correction. Got a $1.33 at a 41 delta. Still 33 cents high, but we're getting back there. I mean, considering 4 weeks ago we were at $6 and $7 at the money. On the call side is just crazy with 30, 45 cent spreads, which is definitely out of our wheelhouse. So it's all good news. It's all good news on Micro Moment.
Okay, good. And let me explain. When we say second session, their first session is always from 8:30 Central Time when the market opens to around 9:30, sometimes 9:45 Central Time. Then they'll break off, and sometimes they're going to come back around noon or so, and until the market closes a lot of times, and do the second. We call it just a second session. The way you know that the second session is going to go in when you sign in the morning. And when they finish that up, the screen sort of goes blank, but you're still into the session. And if you just sit there and you'll get a text, as long as we have your name and your cell phone number, you'll get a text if they're on the way back. And so you always get it in sufficient time that you're going to be able to catch them when they first get there. And they have been having some fantastic results. And I see Martha over there likes that, and several other people like those. You guys might punch in how much you like those second sessions into your little box, and we can see that, and everybody see it, and then we can answer any questions you might have. Everybody here, if you want to say something, make a comment, or do anything, just punch it in. And see, there's Martha. She loves the second session. We knew she did. Martha had a really great day yesterday on the second session. So fantastic.
Really great.
Yeah, absolutely.
Yeah, Martha's really been doing well. Has been doing well for a long time. So we love her on the morning call. She always contributes in a very positive way. She's always supporting other people, which is, what we love to see in our family in the mornings.
Okay. And excuse me, Randy. Now, Randy doesn't have a session. He has sessions all times of days, all kinds of hours during the day. So he doesn't have like a morning session or an afternoon session, but he has a lot of sessions. And they're always videotaped and recorded. And we've never really put those sessions onto YouTube. Once they're done, his is a little different than the Micro Moment. Micro Moment, you're doing a trade. You're getting in and you're getting out within seconds, maybe 15, 20, 30 seconds, sometimes a little longer. But you're in and out and that trade's done. So we have no problem recording that, putting it on YouTube so you can see how this works. You can see how you interact with Mike and Tim, but it's not going to do you any good because that trade's already over with. But you see how they get it done, and then if you subscribe and you're in there, then you're getting to do the actual trades also. So where Randy's is totally different. He's in trades for various lengths of time and all kinds. Randy, why don't you kind of comment on what you've been doing and how your trades are going?
Yeah, well, a couple of things about YouTube. My sessions are training sessions. So I do 3 different training sessions live in the, 2 are live in the market and 1 is just live because I do it in the evening. But they're to actually train people how to do the process so they learn. And they learn, they can then do their own, they can find other things, they can watch what I'm doing at the same time. But they're not quite so conducive to YouTube because they're long. So on Monday mornings, it's training for about an hour and a half on the momentum trade, which is Tim and Micah is momentum trade on steroids. So that they're micro moment trading because they're in and out in like seconds. A minute is like a lifetime for them. Yeah. Where the momentum trading uses a daily proprietary chart from Compound or from micro moment trading. It's a daily proprietary chart, and we're looking for the beginning of the rising cycle. So we go through lots of charts. I teach how to read them. They're easy to learn how to read. Everything's right there on one screen. It kind of combines 21 technical indicators all into like one chart that makes it easy to learn and understand. And we're looking for the beginning of the rising cycle. Then we get in a position, and a day or two later, typically get out. And so we're looking for about 5% for a few days, where Tim and Micah get 5% over a couple of trades, within the same day. That's one session, and that's as Joe said, those are being recorded at the same time that they're live. So they're live in the market. I go through lots of different charts. We're looking for positions, and typically we find one or two actually right there at the time. And then the people that are subscribing to the service are finding them all during the week by using that training.
Yeah.
Go ahead.
No. Well, I was going to say what Randy does when you subscribe to his service. When he does a trade, he's doing real trades in his account, and he sends you out when he's prepping a trade, what he's getting ready to do. Then he sends you out when he does it. He sends you out when he gets out of it, and you have those instantaneous. So if you attend those sessions, and it's not delayed email or something like that, which would be terrible. But that's what he does. His trades are very easy to follow, but you learn. His trades are longer, but he gets into positions that they're supposed to be longer, and he's never going to lose money on a stock, because if he gets into a stock position or a leap position, which gives you ultimate leverage without the use of borrowing money, and then he sells calls against those what they call leaps, which is just another long-term option, and no matter which direction that thing goes, he's going to make money. If it goes up, he's going to get out of it. If it goes down, he may even get out of it at a profit. He's never going to do anything intentionally for a loss. And he's a true epitome of treating stocks like real estate. You buy a good piece of real estate, and you rent it. And when you sell that car, you rent it. And so you learn all that management stuff. Now over at Tim and Micah's, you might call them flippers. They're like flipping real estate. They're in there and they're out within minutes. You never in over anything overnight. You never in anything for more than a minute or two at max. You always have your money back, and you can redeploy that money again on another trade. So a lot of people say, well, if I got this much money, I'd do it. Well, when it closes out, you got your money back, depending on how you got it set up with your online broker. And you do another one. So you may turn the same money over 4 or 5 times, and that compounding is astronomical. And I say this all the time, $2,000 in 2 years is 6% a week. Now these guys made 20-something% today, 6% a week, and you're going to turn $2,000 without ever putting another penny in the account into $800 and some odd $1,000 plus in 24 months. And you can do it. People do it all the time, and you can do it virtually. So you don't risk any money until you learn to do it, and then change from virtual to the real stuff. You can do the same thing with Randy. And during this 2-day seminar we're going to have in a couple of weeks, the Covered Call Leap seminar, for the first time, and this is going to really help out in Randy's situation. If you're a lover of stocks that pay dividends. Right now, a lot of companies, like a lot of oil companies, are slashing dividends to either zero or maybe a fourth of what they were. And you've been dependent on those. Well, Randy has a technique where you can keep your stock, keep your dividend paying stock. It'll come back, and use the technique to sell an out of the money call the same month, collect that fee. If the stock goes up and you're called out, it's out of the money. You're going to have a profit in the stock. You turn and go back in again. You got this profit in the stock, and you've got your income from when you sold it. And you never have a problem with that. And you maintain, it substantially increases the yield above your dividend, because most dividends are dividends, but they're not like 7 or 8 or 10%. There may be 2 or 3, something like that. So you can substantially increase. And for the first time, we're going to be going over that. And Randy will really help out, because we'll pull up our charts and you can see how you can do it right off the micro moment charts. So, Randy, did I pretty well explain that? See, sometimes he forgets to cut on his mic.
There we go. Yeah, good job, Joe. In addition to the Monday morning training, I also provide Wednesday morning live in the market training for 2 hours to actually teach how to do the process. And as you said, Joe, the covered call process is a slower process than Tim and Mike is. So you can actually learn how to do the process and implement them on your own while seeing exactly what I'm doing, day after day after day to manage my portfolio.
Well, what's so interesting is difference between Micro Moment and him. Micro Moment, like I say, is fast. It's fast. And he's been with us so long, 14, 15, 16 years, and has clients that have been doing this stuff for 14, 15, 16 years and are still doing it. That his sessions, those live sessions, sometimes they get a little slow after about an hour or something because they're all kind of falling asleep. The voices get a little, groggy, but, they usually snap back by the end of the session. So it's just so fun. It's just so amazing to have people. It's just been, again, maybe people don't have as much to do, but every day I get emails, people that are still doing this stuff, but they've been intrigued with the Micro Moment. Now they want to add that. And a lot of them are using that transition technique he's got, which is like, say, doing a Micro Moment trade, but maybe going on it for a day or two. And because that's more like, what they like to do. So.
Yeah. If you like instant feedback, MMT is the place for you.
Yep. And
but if you can't quite handle that kind of what do they call it on Star Wars? Warp speed.
Yeah.
If you can't handle the warp speed trading, covered calls is slower, and so it's a good place. Number one, it's a good place to learn. We all learned in the old days just how to do covered calls. That's how it really got us into learning how to trade stocks and options. And then it's just progressed dramatically since then with up to the Micro Moment trading. But just to give a little review, as Joe said, in the covered call platinum service, we buy stocks or we buy an option and then sell a near week option against that to generate income. And the goal is to be called out, which is totally different than the stock market. The people on Wall Street, that's not what they want to do with covered calls. They're just trying to speculate and generate income while they're waiting for stocks to go up. We implement in the money covered calls, and so it improves the probability that we're going to be called out, and we want to be called out. So it locks in the returns, the income, and returns the capital back to our account at the same time so that we can use it again for the following week. And that's where the compounding comes in. We're compounding the returns using the same money over and over and over. Tim and Micah use the same money over and over multiple times in a day. In the covered calls, we use the same money multiple times in a month. And so last week, the positions that closed on Friday, MasterCard 12.1% return, the VIX, VXX 11.1% return, Gilead 11.1%, Zoom 11.1%, Microsoft 11.6%, Apple 11.1%, Qualcomm 20.4%, and SPY 8.6%. Now those returns are based on a week or less of being invested in those positions. And because we're using options instead of stock, we're leveraging the capital. And the most that was invested in any one of those positions was $2.25 per share.
There you
go. And so that would be $225 for one contract. And the percentage return, because we always count everything in percent return. So the more money that's invested, the more cash that you're going to earn, the less money that's invested, but it's still all the same percentage of what you have invested. So it's number one, it's a good way to have a little bit into the market. So you don't have to be investing hundreds of thousands of dollars into the market to be at risk. You can invest a couple hundred or a couple thousand and not be as big of a risk out there in the market and still generate fantastic returns on that capital. When
Randy says leveraging, and I mentioned this a while ago, we don't use margin. Margin is a death trap, particularly when you're doing covered calls. That means you're borrowing money from the broker, and he's going to only lend you 50% of leverage. And if you run into a problem, you're going to lose all your money in all probability. We buy the option, which gives us probably 85, 90, 95% sometimes of the price is our leverage, not 50%, and we don't have a loan. And so it's just a fantastic way by doing the options, and that's why we do it, because you can get bang for the buck, and it's just a huge advantage. And now, when Tim and Micah are doing their trades, you get the chart. Their trades only have one rule only. It's not complicated. The one rule is, if you see red on that screen after you enter, get out of that sucker. I don't care. You don't sit down and wait. Oh, it's going to go up. It's going to go up like a speculator does. You get out. You may have no loss. You may have a 1% loss. You may have a really small loss is what you're going to have, because you're going to turn around and in a few minutes do that same trade again and make 4 or 5 cents, which would be huge. Anytime you see red, there's no rules. You see red, you get out of that sucker. It's just like looking at a bull in the eye. You get out of his way. And so that's the whole key to that game. Where Randy has these various techniques. There's so many things, so many different rules. But the rules are not complicated, but you have to learn them. And the rules are to keep you from losing money, and you can handle any situation that comes out. So all we try to do is, and we have a selector that does this, is where you can pick your stocks and your options to get the best ones that meet certain criteria, and then hopefully will not go out of business. That's the only way that you could get hurt. So.
Yeah, so that's the critical part. We call that management.
Yeah.
So what Joe was talking about is a stock can do one of three things. It either goes up, it goes sideways, or it goes down. With the covered call techniques, including the management that we teach, if the stock goes up, fantastic, we get called out, lock in our returns. If the stock goes sideways, fantastic, we get called out, lock in our returns. And because we're implementing in the money covered calls, that means that the stock can actually go down and we can still get called out, lock in our returns, and get all of our capital back. If it goes down more, so I call it like 2.5 things. So goes up, great, goes sideways, great. It can even go down as long as it goes down in a kind of a measured amount. If it goes down a lot, then we just implement the management techniques, which allows us to continually generate income week after week after week until it comes back up and get called out. And that's why it's important for the selection of the equity that we're investing in, because like Joe said, as long as it doesn't go out of business, if it doesn't go to zero, go to bankrupt, then we can continue managing that position for the long term, even if it has to be for years and years and years, and still generate income on it. Now, we don't do that usually. Usually it's only a couple of weeks. I did have an email during the week where one of the clients asked, well, I see that you have positions in management, like how many management positions do you have to get into? And I didn't count them all up, but just going back to January 1st of this year, I've entered over 100, if not almost 200 positions. I'm currently managing 2. And those positions were only entered a week and a half ago. So and this has been an up and a down market, right? So it doesn't matter which direction the market's going. So we had all-time highs a couple months ago, and we've had 35% decline last month. So it's still able to manage through with the management techniques.
One of the other differences is Randy can do stocks and indexes. Micah and Tim pretty much 100% just do the indexes like QQQ, SPY. Now they do an Apple, but Apple's very big. It's not going to be going out of business. But they don't need to worry about the criteria because the indexes have good criteria. And but Randy is doing indexes and stocks, so it's really important to have that ability, and that's where the toolbox comes in. That has that selector that picks the best ones at any moment in time in the marketplace to give you the highest yields. And where Tim and Mike over there, just doing pretty much indexes. Apple's about the only stock y'all do, is it? The rest of them are indexes.
We've done Microsoft before, Intel once.
Yeah.
But just like you said, I mean, you're going to a stock, you're committing to a tenth of the volume, an eighth of the volume that the indexes have. Like when you have 6,000 contracts on one strike price on just buy on one expiration, in the first today it took 3.5 minutes. I think it was like the 290 call on SPY got 6.5 thousand volume, so 6.5 thousand contracts traded. It was about $1. That's $100. 100 contracts per share times 100, so 130 times 6,000. That's how much money was exchanged in the first 3.5 minutes of SPY. So once you get used to that, it's really hard to go back to a stock. You can if it's Apple or a top dog, but I mean, it's hard to beat. Honestly, all of the stocks in that position that would hold are the higher price ones, Tesla, Amazon, and you're going to be paying $25 for an option there.
Yeah.
So it's just the sweet spot that we found for sure.
I think one of the other interesting things about the sessions under the micro moment is the participation by the people that subscribe to it. Unlike Randy's traditional covered calls, when we're doing those sessions every day, you can actually talk and type in messages, so you can talk when they've done a deal. We immediately get responses on how our clients have done deals. Now, there are a few clients that have developed certain algorithms. Martha, for instance, she has developed an algorithm called the 10-cent key. She just has one key. She presses that key and it does her whole trade for her. It's the 10-cent key. She always just makes 10 cents, right? And Martha, you got any comments on that? You guys ought to ask us some questions to do something besides just sit there.
Yeah, that's the main purpose, guys, is to be able to help you guys out. So whatever you're curious about, what you want to know.
So we get instant feedback from those clients. We're doing those sessions with, and Friday is Phone Friday, and tomorrow, and you can actually call in. Everybody can hear you and talk. So
yeah, I think that's one of the strong values of MMT is being able to get feedback, from us and from other people in the session instantly. I think it's a great learning environment for that reason, and we do have a lot of interaction, which is great. We love it because that's our primary purpose, right? Is we're a training organization. We're not an alert service, so and most of our clients on the call are making their own decisions. They watch us, but they're making their own decisions about when to enter and exit a trade. And that's really gratifying for us, to see our students, subscribers pull profits. It's great.
And you can see there, Martha says the 10-cent key is fickle, Joe. So, and every now and then, later on, if it gets kind of slow, Tim will lean up against the wall back there to take out a guitar and sing a song. It's really
That's right. And I've got
Micah joins him, for the karaoke part.
And I've got my keyboard right next to me here for
there you go.
for playing.
Yeah, and what are those things you call EGOs or something? What that you do on the piano there?
Arpeggios.
I think he's talking about the EDM.
Yeah.
Oh,
EDM. So he does those little EDMs on the keyboard there. Well,
yeah, electronic dance music.
Yeah, there you go. Okay, well, if nobody has any questions,
So then does Micah get up and dance around and sing then while you're doing
the he sings a lot. Yeah,
I hope so. As Micah is searching for a possible new home, maybe we can convince him to come and stay with us for a bit, and we'll do some stuff.
Hey, that'd be cool.
There you go. Steve tells Randy, I've done your momentum trading class and service in the past and would like to attend a refresher. When do you expect the next classes?
I'm not sure. We'll have to talk to that and get one scheduled.
Okay.
So Joe's got the covered call training coming up in another week.
Yeah.
And so we'll have to look at getting the advanced charting one going as well.
Okay, here's a good question from Todd. What kind of annual returns does Randy get? Now, Todd, are you sitting down, I hope? Go ahead, Randy, answer that.
I have no idea. I don't add them all up. I just go day by day, week by week, and keep generating income on the position. So I would have to go back and look at
Well,
add them
this
up.
week you mentioned some for this week, and what you went through each one of them and what they all added up to for the week. How much was that?
Oh, well, they average around 10% a week on the position. So, that would be a lot for a year.
Okay, but a position averages around 10% a week.
Yeah.
Right. Okay, so 52 weeks. So you talk about 400, 500, 600% a position.
Yeah,
exactly.
It would be.
And nobody ever believes that, but you do. They're real trades. And we're also going to be. We have a fund that Mike and Tim are doing, and it's just brand new, and it's going to be audited. So those will be audited statements, bit of micro moment type auditing. But let's say Randy's been around for a long time, and he wouldn't have the following, and the people report their earnings not as, as quickly as the micro moments, because they're doing those trades right then. They're coming on and say, hey, I just made that. Hey, I just made that. I just made that. And a lot of times the clients are a heck of a lot better than Mike and Tim, because they tend to talk a lot and they're instructing a lot. They got that, trying to show people how to read that proprietary charting. It tells you when to get in and get out.
I would say more often than not that the clients, there's clients that figure it out. You can call them graduates or something like that, but there's clients that just get it. They know they get it. We know they get it. And if you're, a part of that group, then, I mean, it's rare that we outperform them actually because of that teaching. I mean, it really has a way of getting, because there's so few rules, everything, it really has a way of getting everyone on a level playing field. And that's not, saying anything. Tim and I are legitimately not any better than Martha, Melissa, Kathy, Deshawn. I could go on. All these people that really understand it. Once you get to that point, I mean, it's just who clicks the button, a half second sooner, a half second later. It all comes down to a lot of uncontrollable factors. But that's after the point that, yeah, we're talking and everything, and we got some things to do while we're trying to trade. So, I mean, I would say more often than not, our clients outperform us, which is a great thing to see. Yeah. That's what we want.
And also, since we just ended our first year with the micro trading, since it became a subscription service, we've been doing it 3 or 4 years. Joni and my daughter Cezanne did it before these guys took over. They didn't have near the returns, but theirs were slower trades, and they were still huge, like quarterly, probably 130 or 40 or 50 on a quarter. Where these guys damn near do that sometimes a day, but it's important. We've had our one in-person seminar, the very first one we did some time ago, and we're going to have one in March. And all this stuff happened, but we'll be setting up another seminar in Fort Worth. You can come. This time it'll be online also. Plus you can come in person, and we have a big dinner and bar and all kinds of stuff, and so everybody has a good time there. But it's where you can really see these techniques as they're being developed and visit with these guys. And there's Jay. Jay's on there every morning. Sometimes he's like, Jay always knows you're either the first or the second person that signs in when I cut the thing on, which is usually around 8:30 Central Time, my time, 7:30 Central, Fort Worth time. Jay says, talk about the difference in time spent daily between the various systems. Okay, this is interesting. Randy spends a lot more time because it's just the nature of his business. Tim and Micah, I can tell you exactly how much time they spend. About 1 hour every morning, and if they have a late session, maybe another 30 minutes to an hour. So 1 hour a day. They just work 5 days, 5 hours a week if they don't do a second session. Maybe 10 hours if they do. You don't want to trade very much when you're doing the micro moment. You make so much fantastic money real quick. It kind of mind boggles you. All of a sudden, you're into something too long, and then you start guessing, and you start, you're getting fatigued, and you just have to quit. So it's not something that you sit there. They're not day traders. They're not speculators. You get in there, you do the trade. You may be gone in 15, 20 minutes, and A lot of people can easily do that because usually within the first 15 minutes, we're getting reports from what people are making, and they're already making fantastic returns. They could quit after 15, 20 minutes. Would you guys agree with that?
Yeah. Yeah, absolutely. And here's the thing for us is we trade so in the moment. We are chart dependent to the point that it doesn't make a lot of sense for us to do a lot of pre-market analysis or do a lot of technical analysis because we're just in the moment, right? We're cherry picking trades, and
by an equal amount of calls and puts within a day, even
Yeah.
split.
Yeah. I think we bring a lot of other knowledge to the session to help support some of the things, to get a wider understanding of what we're doing. But the fact is we are 100% dependent on the charts and the option chain.
Would you guys agree with me on this? Jay is one of our subscribers. That is the same Jay.
Yeah.
And the same Jay that does all those fantastic trades, right?
Yep.
Yeah.
So Jay is like, he's trying to be humble there. Like he knows the answer to those things. Jay is a fantastic, trader with our micro moment stuff.
Yeah.
So let's, I think Tim and Mike could go over charts, review trades, both gains and losses, and share their findings with us. So with that, overtime, at least 2 hours a day.
So don't get us wrong. I've spent a lot more than an hour a day on this stuff, and we're building. We're always building different, things or a PowerPoint for the next seminar or something like that. So we've spent a lot more time than that. But the time commitment for you guys, the clients, is just about 5 hours a week.
Yeah.
So yeah.
Yeah, and we're along those lines. We're also testing things, looking for new patterns that we can exploit, and we do a lot of testing and back testing before we release it or talk about it. So we're always looking.
Jay agrees. He says yes, so he's agreeing. He knows he's good. And Martha says she cannot learn enough.
Yeah. And along those lines with covered calls, Joe, it really is how much time do you want to spend? You tailor the positions that you're looking for in the time frame that you're looking for to go with the amount of time that you want to devote. It can go all the way from a half hour every evening just to do the traditional covered call, buy the stock, sell the call for a monthly basis, all the way down to an hour or two a day if you're doing weekly options with the covered call technique. So it's really what you want to do. Now, I spend a lot of time because I'm looking for managing, communicating all throughout the day, and I also do all the different techniques. So I'm doing micro moment trading sometimes, kind of fill in the gap, so to speak. I'm analyzing the current positions. Is there any management that I want to do? And I'm looking for new positions all the time. So I'm just in the market. Now I don't have to sit and stare at the computer all day because I can go do a project around the house or run to the store if I want to, or go out and exercise. So it's not a constant moment by moment. Where micro moment trading, you're there for the amount of time that you're trading and you're actually watching it. But the covered calls is a much less time intensive. And again, it's how much time do you want to spend? You certainly don't need to spend all day, every day doing the process.
Here's a good question by Thomas. Outside the morning, parentheses, and possible a later session, how much time do the MMT warriors spend trading? I'll let them answer this specifically, but not much, if any. They either trade in the morning or they trade in the afternoon. They will occasionally do a trade, maybe sometimes, but it's something we never discuss. Do either one of y'all do anything much outside those sessions?
Not hardly. There's a couple personal, longish term things that I miss with, but they're just pure speculation, little ideas I have here and there. But not a whole lot. Like Randy just said, he basically just explained it. It's as much time as you want to put into it. And it's a little bit of a give and take with how much time you want to spend, because there could be a news release and a huge move every minute, any minute, right? So do you want to sit there and stare at paint dry and risk getting bored and making a trade because you feel like something's there that's not? Like, there's a lot of risk with staying on for too long.
Yes.
And it'll drive you nuts, because this is not, like, once you understand it, it's pretty chill trading. It's pretty calm, but man, you don't realize how involved you are in that first hour until you're out of it. Like, there's a lot going on. There's a lot of lines. Like, you just can't do it for 8 hours. You don't want to. There's no reason to.
And remember, the 52 weeks, which is a year, ended last Friday. They're up 5,143.94%, 98.92% on a weekly average basis. Now, why would they spend more time? What would they be need to do that for? Not a bit. Marcus, can you pop up Benjamin's question?
Yeah. Joe needs to read this.
Yeah, I need to read this. This is from Benjamin. Randy continues to deliver and manage incredible returns week after week, even with wild market volatility. Thank you, Randy, for being an incredible trader and gifted teacher as well. There you go. That's nice.
Thanks,
Benjamin.
man. Appreciate that.
Yeah.
Awesome.
It's well deserved.
So
yeah, just one other thing on a micro moment is we're pretty intense for an hour. We're searching and looking for those moment to moment things that can happen, and it's tiring. An hour 15 in the morning is really about all you can do before your attention starts waning and you get tired. And as Micah said, you can make bad decisions at that point. So it becomes a matter of diminishing returns. An hour in the morning and maybe revisit in the afternoon, and that's really all you need.
Hey, yeah, Marcus, can you pop up that one from Daryl again? It disappeared from the screen.
Yeah, and go ahead. Just a quick comment before that, to go along with Tim. Just in this time frame, we've been on the air here for 42 minutes, right? I've already done 4 micro moment trades on my SPX. I use SPX, the index, and in those 4 trades, just while we've been doing it, and I haven't been able to concentrate heavily on it, but 2.7%, 1%, 1.5%, and 1%.
There you go.
That's on the same money used 4 different times, just in the 42 minutes right here. And unfortunately, while I was getting logged on just before we started, there was one of Tim's magnificent chart setups that I looked and said, it's getting ready. I was doing the login, and there it was. The tick shot all the way down through M1, M2, M3, and through the lower Bollinger Band, and it just kept going. And that would have been a $3 per share profit if I hadn't have been logging in. So, but the thing is, it doesn't matter. You can miss one, you can miss 100. There's going to be other ones throughout the day. So it's whatever time of day that you want to devote to the time. The best time is the first couple hours of the market. So that's why Tim and Micah usually concentrate on that, because that's where the real volatility and the real movement of the trade is going. But just to let people know, as far as time frame, you can just spend 42 minutes. You can do a couple of trades, and you're done for the day.
Daryl says Tim and Micah are very patient and understanding with new learners. That's right.
Appreciate that.
Yeah, thank you very much.
And Martha says Tim and Micah have gotten me through a very bad period and kept me going until I finally had the hang of it. They are heroes. They are my heroes. And let me tell you something about Tim too. Tim, when he first started some time ago, he lost a hell of a lot of money because he wasn't following the one rule. We only have the one rule. When you see red, run. Hey, that'd be the rule. You see red, run, right?
Red rum.
And then he put himself together, as so many other clients do. The shots one the same way. The shots just he had 14 uninterrupted positive trades a couple of days ago. 14 right in a row. And Micah and Tim can do 9 trades a day, and they'll maybe have at least 1 or 2 losses. They're small, and so Deshaun. But Deshaun, did the same thing. He got all involved, got started, was making incredible amounts of money, and started bragging to people how easy it was and all that. And then all of a sudden he became a genius and was going to put in his own rules, and he lost a lot of money. Now he's back.
Yeah, I just made two quick call trades on the push.
Yeah, on that market going up right there.
Yeah.
One other little sub rule to kind of add on that is you really have to control your greed.
Yes.
You got to get out when you got the profit, not saying, oh, I'm going to get more and more and more, because it can quickly turn around and your profit is gone. So you got to follow the training that Tim and Micah do, and they get in, put the order in to get out, and then lock in that profit.
What's so creepy about Tim is he's getting those trades. Tim, be sure and send me those, so we'll add them on for today's. It's creepy about him is I can watch him here, and his eyes are real shifty, and they go from left to right, left to right. Where Randy must have these neutral colored glasses. You can't see what his eyes are doing. But Tim's over there.
But that's the thing throughout. You're watching as our heads are turning, because we're looking at our charts that we have multiple screens going, and we're looking at our charts while we're talking, looking for potential setups and to see what the market's doing. So that's why we're just not all looking directly at the camera and talking, because we're doing stuff all along the way, and we're not quite as good as I know my wife. She can do like 5 things at the same time.
Right.
We can walk and chew gum at the same time, and beyond that, it gets a little more challenging for us guys. But I'm not as good as my daughter and my wife. They can be doing 14 things and still go, oh yeah, we caught that. I spend a little bit more time concentrating.
Yeah.
There's a question from Mike. It says, anybody having trouble getting 100 contracts filled during MMT trading?
I've been trading 100 contracts today and haven't had an issue. A little slow on the sell side, but no, it's been okay today. Of course, we've got pretty good volume.
But that's a key is when you're looking at the QQQ, the SPY, even Apple SPX, those equities they have huge amounts of volume going in and out. So that's what makes it that you should be able to get filled. Now, if you're trading some obscure equity that does 4 contracts a day and you want to do 30, well, you're going to have a more difficult time getting it in and out of those. So you just want to make sure that there's lots of volume going on the one that you're trading.
Yeah.
I find most of the answers to questions about micro moment is like, why would you? Right? People ask me about, do you fully rely on support and resistance? Do you draw trend lines? No, why would you? Like it works without it, right? Do you trade for 8 hours a day? No, why would you? Like you only have to for an hour.
Mm-hmm.
Can you like there's no difference in which direction you're buying. There's no difference in what time of day you come on. Yeah, first and last hour is always the most busy. But why would you complicate, change, do all these things? Is oftentimes the answer.
Yeah, and you never try to figure things out before the market opens. Or we don't care if it's going up. We don't care if it's going down.
You're
all pre-market. A lot of volume. You're
all pre-market.
Yeah.
So yeah.
Because what is pre-market analysis? It's creating a bias early.
Yep.
Yeah.
When you trade both sides momentarily, a bias is a negative thing. So it would actually hurt us to do a pre-market analysis, because if there's good news out, right, we're going to see that put setting up, see that we should probably get into it, but we're not, because we think the overall in the dayward pressure is going up. And now that could be true, but we're still going to miss that put where we wouldn't have if we just don't. And this is just for micro moment. This is just the nature of 30-second trades. Mm-hmm. It's a different ball game.
Yeah. Go ahead, Andy.
Well, in the market, from the 5 minutes before the market opens to 5 minutes after, it can just totally change anyway. So you could spend hours and hours trying to do analysis before the market opens, but until it opens, all that stuff is really a waste of time.
Yeah. Let me read some real light ones, then we got to leave. It's already 11:50 here, so we've been on long time. They'll cut us off here. Melissa first, just when I draw the line on my notepad, I'm done trading. Then I look back at my charts. Highly recommended this. When did I get in and out? What did I see or thought I saw? Okay. Yeah. And then Melissa again says, Joe, do you trade anymore? Yes, I do. And then Robert, Tim, do you still place OCO orders?
I do not. I place tickets, buy and sell. It's the quickest way for me. I was placing OCO orders. I was running into issues. Micah developed some macros for us to use, but just finally got to the place that we're just looking for the easiest way in and out and easiest way to cancel an order. And if I'm trading on TradeStation, I trade off of the option chain directly. Now, and we talked about this morning, but I don't recommend this if you're starting out new. We absolutely recommend that you set stops, use an OCO, just get used to the platform so you don't have a loss run away from you. But as you get more experienced and comfortable with the platform, which we really want you to do before you start trading real money, I personally, and I just have to speak for me, I've just found it easier and more efficient to, I have a 1-click buy and a 2-click out, and that's it. But you got to develop that get out muscle, right? We want to keep our losses, 1-2 cent. That's our goal. We want good losses.
Time goes by a lot slower when you're in a trade. It's like staring at the second hand of a clock. If you're in that trade, it feels like forever. You'll get out, it'll only be 20 seconds.
Yeah.
The people that lose, remember,
shocked.
The people that lose money do it on purpose. When they see that red, they know they're supposed to get out. You can make every mistake in the book, and if you just get out when you see the red, you're going to make a hell of a lot of money because you're going to run into twice or 3 times as many plus trades, and those never hurt you. You'll run into them by accident, just like you run into a loss by accident. But you don't get out. You don't even just a way you not make money. You just have to follow the rules. So, and don't.
We go back to this all the time. Is whenever we have folks who are having a string of losing trades, the first recommendation we make is go back to the basics. Right? Remember the rules. Cut back your contracts to 1, but follow the rules. They work. They work. They just work.
There's only 1.
Yeah.
You guys act like you're so smart. Randy's over there has to be smart. He's got so many damn rules. You guys only got 1. Y'all philosophize about particularly Micah. He can talk about 1 rule all day. So, okay, we have to go. It's we only got a couple minutes left, and Marcus gets mad at me for run over. And so, Marcus, thanks for taking care of all this day. And Micah, thank you for being here. Tim, thank you. Randy, and don't forget, these guys are going to be participating, and maybe even Keith, in the 2-day next weekend. Not this weekend, but the next weekend, 16th and 17th. And it's a lot of fun. And it's more fun because it's Big Evident. And so. Okay.
And Joe gets to talk for 8 hours the whole day, so he loves to do that.
We'll see y'all later.
Take care, everybody. Stay safe.
Bye-bye.
Bye.